Yeah, so far this year, we've seen the lowest volume since 2016. And as you said, it's one of the longest droughts we've seen. Overall, global IPOs are down 17%. That's interesting within the context of fairly benign investor sentiment. We've seen several indices globally hit record highs, the S&P most notably, and we've also seen volatility stay within a relatively stable range. Looking at the VIX over the last few weeks and months, it's been relatively low. So almost counter to expectations, given the benign investor sentiment, we have seen IPOs come down. One of the reasons for that could be concerns around valuations. We know that investors in the market are looking for handsome discounts. And one thing we've also heard from corporate executives is the challenge of finding normalized EBITDA numbers to get to true valuation figures.
It's really puzzling, isn't it? You mentioned a couple of potential reasons there, but I'm wondering to what extent geopolitics plays into this.
Wherever there's uncertainty, that's never a good backdrop for the new listing market. Companies need certainty. Investors also seek certainty. So where we see so many elections, we're looking at South Africa today, we have the UK coming up, we have the US later on in the year. Clearly, that could have impacts on policies, regulations, which simply adds to the question marks around deals. So what we do know is investors are looking for windows where they can find pockets of certainty and where they can find confidence around valuations to get deals over the line. So with political uncertainty and also uncertainty around monetary policy, where will interest rates be in the next weeks and coming months? That's also a big question mark hanging over the new listing market.
Romaine, I'm wondering about sponsor-led IPOs because obviously we've got so many private equity houses. They're chomping at the bit. They're waiting to take these companies public and return money to their LPs, and they're under a lot of pressure from those LP. What kind of a window are they waiting for? Again, is it the sort of uncertainty and the factors you just mentioned? Is it the valuations that are not really in line with what they're expecting, especially if they're fundraising at the same time?
A mixture of all the above. We know that GPs, private equity firms, are under a lot of pressure to create liquidity and distribute back to LPs. We've seen a very challenging year for distribution out to LPs, and LPs are now chomping at the bit to see more sponsor exits, whether that's through IPO or through the M&A market. We do know we've seen a big uptick in M&A, especially in Europe. However, the IPO markets have been a good exit route, especially for names in desirable sectors, names linked to AI, technology, healthcare, and consumer. One thing we have seen, despite the fall in listing volumes down 17% so far this year, according to Dealogic, there has been a relatively robust aftermarket performance. So we could look at deals such as Reddit in the US, which is up 70%, or even Galderma in Switzerland, which is up 38%. So despite the volumes coming down, where there is a good quality asset, so sponsors who hold highly profitable, high margin business with robust value creation models, there is a market for listing those names, especially in Europe and the US.